Bitcoin climbing through $109,000, then a slap back down to $103,000, while war and inflation fears collide. In today's daily news, we unpack why global markets are tightening as geopolitical flashpoints, central bank hawkishness, and corporate Bitcoin buying collide. First, MicroStrategy's $1 billion share offering pumped 10,100 Bitcoin into its balance sheet, now owning over 592,000 coins, boosting institutional confidence in crypto as a high-yield store of value. That happened just as Bitcoin held steady around $107,000 on institutional accumulation amid broader macro uncertainty. Meanwhile, Bitcoin's correlation with inflation and oil is tightening. The Israel-Iran conflict pushed oil prices up by more than 13%, complicating the Fed's inflation fight. That same Fed meeting is now expected to hold rates steady this week, reluctant to cut due to global tensions and sticky inflation. Markets now see maybe one cut this year instead of two. But macro data offered a surprise. US CPI cooled slightly, fueling optimism for Bitcoin, with technical charts pointing to a possible rally toward $120,000. Analyst Matt Mina argues this recent CPI print could even accelerate a run toward $200,000 by year-end. At the same time, in the UK, sterling is under pressure, slipping to $1.35 while markets brace for key inflation and interest rate data ahead of the Bank of England's June 19 meeting. May CPI is expected to show inflation easing to around 3.4%, but underlying pressures, including energy costs and recent data errors from the ONS, cast doubt on the true trajectory. The Bank of England remains cautious. After trimming rates in May to 4.25%, the MPC is likely to maintain current levels this week, with markets anticipating only 2 quarter-point cuts for 2025 amid uncertain wage dynamics and geopolitical risks tied to tariffs and oil. With all of this news, caution is warranted. Bitcoin's tight coupling with equities caps short-term upside, and current geopolitical and policy uncertainty may keep things choppy. So what should viewers do? Stay alert to FOMC commentary, oil price shifts, and next CPI and PPI prints. These macro levers will determine whether Bitcoin breaks above $110,000 or stalls. And if rates pause further or the dollar weakens, crypto might ride that wave. In short, macro risk is rising, but so is Bitcoin's institutional momentum. Now's the moment to watch the charts and the headlines. If you want daily macro crypto updates, smash that like button, subscribe for truth you can trade on, and share this with your network.